Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Rapyd, Arik Shtilman. Great to have you with us.
Thank you very much for having me.
Okay, before we get cracking, let's learn a little bit more about Rapyd. So, Arik, you describe Rapyd as the world's biggest local payment network. What does that mean in practice?
In practice, it means that most of the world thinks that the world is dominated by Visa, Mastercard, American Express, and everybody is paying with a debit or a credit card. The reality is very different. Outside of Western Europe, in the US, most of the people prefer to pay in different types of payment methods that are super localized to their countries. Doesn't matter if it is Ideal in the Netherlands or GrabPay in Singapore or Pix in Brazil. And basically what Rapyd does is taking all these local payment methods and turning them into globally accepted payment methods so people can actually do business cross-border and transact. We operate today in 106 countries across the globe, supporting more than 900 different payment methods.
And I read that you're now valued at $15 billion, which would make you the biggest Israeli unicorn. Is that figure correct? And what else can you tell me about revenues, growth, and perhaps even more importantly, these days, your path to profitability?
So from a revenue perspective, I can tell you that the company is more than doubling itself year over year. In 2018, it was the first year we were in business. We generated $5 million in revenue. In 19, we did 20. In 2020, we did 64. In 21, we did 145. And this year, we're on track to do almost 300. All these numbers are organic. On top of that, we have acquisitions that we've done. And just lately, we closed an acquisition of a company called Valitor that is going to add another $100 million to our revenue next year. So as you can understand from a revenue perspective, the company grows extremely well. From a profitability perspective, the company does not burn a lot of money, so we're still losing, but the burn rate is very low comparing to high growth businesses. And at the end of the day, we will become a profitable company either in Q2 2024 or Q3 2024. And that's based on a decision that the board took. We can even become profitable earlier, but because of the low burn, there isn't really a need, and we're more focused on the growth of the business.
Okay. And even before valuations in fintech plunged, as you mentioned, you'd made acquisitions. You were quite an acquisitive company. I think I read you were planning to buy a US fintech, and now say that thanks to the drop in valuations, you're going to hopefully buy it for half the price. So it almost looks like, perhaps not uniquely, but in you're a rare instance of this market turmoil being almost like Christmas coming early for Rapyd.
It is Christmas coming very early for Rapyd. So Rapyd is a company that is very well capitalized. We raised more than $800 million, and our balance sheet is full of cash. And we were waiting to deploy this cash at the right timing. We weren't willing to, pay up valuations that were earlier in the market. And now, when the market changed, I can tell you that we're now in the process of negotiating two different acquisitions, one in the US and one in Latin America, and the price dropped significantly. So it's definitely Christmas coming early for us.
And what about the Rapyd IPO that you've discussed, and I'm sure you're asked about all the time? Is it on pause for now? And if so, until when?
So the goal was to go public at the end of 2023. At the current stage, it is on pause because nobody will want to go public in these markets. But of course, the end of 2023 is so far away that nobody knows what will be the situation in the markets. If the market conditions will change, then we'll go public. Anyway, from a company perspective and from a governance perspective, we are doing all the preparations internally in order to be IPO ready. And when I say IPO, I mean a real IPO, not a SPAC. We will be ready to pull the trigger whenever the market will be ready for us, and we feel that confident enough that the company needs to go public.
Just finally, you talked about your low burn rate. Of course, you're very well known among the Israeli startup community for quite happily burning millions of dollars on these crazy parties. You've had people like David Guetta come and perform for you at your parties as well. Given the environment and how much pain many other fintechs, startups, and even employees who are being laid off or not getting the jobs that they were expecting are experiencing right now, would now not be a moment to be discreet and perhaps not throw these lavish parties?
First of all, I love the fact that people call these lavish parties, but people don't understand that every single thing that we do, there is a commercial logic behind it. I will explain very quickly the logic behind the parties. So when we started to do it, and we did it twice, right? we had a problem recruiting new employees. Generally, the market is very competitive globally, but especially, for example, in Israel, the market is super competitive for engineering talent. And when you fight with so many different companies, you need somehow to create a brand. And the cost of recruiting an employee was probably around $30,000. That was the recruitment cost, $35,000. Somehow we ended up with the concept of doing these parties that are called the moment, that included also a secret way for engineering talent to basically get a free ticket into the party if they solve an enigma that we published. And that dropped our recruitment cost from around $35,000 to $2,000. Okay. So that is our current recruitment cost of talent. So if you take it and you multiply it in the 250 people we recruited over the last 16 months, you can understand that the party paid back very quickly. Okay. The unit economics are there. And this is why, by the way, our board approved of doing it the second time, because the first time was such a big success. The second time, by the way, was also a big success because we also brought in a lot of clients from it because everybody wanted to participate. And there was basically a huge FOMO of not being there. And a lot of new clients joined the company and a lot of new employees. So generally speaking, you might find it funny, but it's one of the best investments we've ever done.
Okay, so have fun and make a good investment at the same time. So look, we've talked about Rapyd. Let's now get to know Arik a little bit better. So, Arik, I think you finished your army service at the end of 2001 and spent 3 years at IBM before founding your first company. Almost seems like you were just itching to be an entrepreneur, that just being an employee was just like a kind of an aberration to begin with, and then before you got to the main point of your life, which was to be an entrepreneur.
Yeah, I always wanted to do it. You know, I felt a big miss that during the big .com era of 1999, I was actually in the military. I saw it from the outside. I even had a small internet company in parallel to being in the military. And I saw, the ups and downs of the market. I always wanted to be an entrepreneur and to have my own company. And I just waited for the right timing. I was released from the military when the .com bubble burst, right? So it was a little bit more challenging to found companies in that era. I learned quite a lot of things in my first several years in IBM. And then immediately, when the market was ready and I knew what I wanted to do, I basically went out and started my own company for the first time.
Right. And you sold your first startup, IT Navigator, to Avaya, I think I read for under $100 million. Any regrets, perhaps for selling too soon before it became, a much bigger company, or any mistakes you made that you deliberately avoid now with Rapyd?
So there was one mistake only that we did in the previous company, is that we never raised external capital. So we sold the company for quite a lot of money when it was a bootstrap startup, right? We were 4 shareholders, no VCs, no external investors. So all the money went basically to the entrepreneurs. And the only mistake that we did is to basically not raising external capital, because when we came out to sell the company, there was no external validation for the valuation of the company. And if we would have raised capital at a certain stage and we brought in a VC, not because we needed the money, because the business was very profitable, but just setting up a higher bar for the valuation, we could probably sold it for more. So we got 100% of the selling price of the company, but it might be smarter to get only 80% of the company, but selling it for a much higher valuation if we had an external investor. This is what we learned very quickly when we started Rapyd, is that we will need VCs to participate, even though we know how to build a bootstrap startup company that doesn't burn a lot of money. And this time we built it in the right way, raising capital and bringing the right investors to the table in order to make sure that when this company will be big, then it will be as big as it can get. And at the current stage, from our perspective, we definitely are going for world domination.
And I understand you're both a basketball nut and a great cook. Can you tell me a bit about that?
So basketball, it's a love from very early age. I played basketball from the age of 4 up until the age of 18 when I joined the military. I'm a huge Maccabi Tel Aviv fan, and Rapyd is also sponsoring the Maccabi Tel Aviv here in Israel. Always loved basketball, learned a lot from the game that is relevant for business. And cooking is just mainly a habit that I started when my kids were born. And I grew into it because they don't really like simple stuff like schnitzel and pasta. So you have to find better ways to feed them.
They don't sound very Israeli. What's the signature Arik dish in that case?
The signature can be cannelloni that they like quite a lot. It can be actually a very good steak on the grill that my kids from a very early age, they love meat. That's pretty much, the starting points.
Okay, so look, Arik, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with Rapyd co-founder and CEO Arik Shtilman. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so Arik, let's now talk about the future of finance. So Arik, there's so much going on in the fintech space right now, but I want to start with, perhaps the most obvious one, which I know people might get bored that I discuss with everyone, but I suppose you're a particularly good example to talk to, given the amount of money that you've raised and the valuation that you command. What is your take on what's happening in fintech in terms of valuations, fundraisings, and where things go from here?
So first of all, I think that the panic is exaggerated, right? Somebody told me many years a very important sentence, that the trend is your friend. So now there is a trend to look only into cash positive businesses and profitable companies, and everything that growth related suddenly is not relevant. And on the other hand, if you look 12 months back, everybody was looking only at growth. So it seems like there was a complete misbalance, between what people were looking for. And I think that people forget what is important. There are two things that are very important for a business. The business has to grow and grow big time, and the business needs to make money. Now, when you say needs to make money, it doesn't mean it needs to make money now, but the business model itself is clear that it can turn into profitable. I think that in fintech, a lot of companies in fintech clearly will be profitable companies because the business model behind financial services is very clear. And I think that the panic is a little bit exaggerated. There are a lot of other businesses, especially in the neobank space, that their path to profitability is very challenging because they're not in lending and they're not in these traditional, financial services, revenue generating businesses. And there will be a challenge for fintech. But if you look at companies in payments, if you look at companies that are lending related, buy now, pay later, and etc., all of them clearly are going to be profitable or already profitable businesses. So I think that the panic in valuations generally is super exaggerated. I don't think that every company that was valued 15, 20, 30, 50 billion in the past is worth it. But on the other hand, dumping everything completely and saying, oh my God, if you're not cash flow positive in 6 months, then your business is not real, is stupidity. So I think that everybody needs to calm down. Everybody needs to understand and go back to the basics. You need to grow and you need to become profitable. And a lot of these businesses in fintech have both of these things. And I think that around October timeframe, things will cool down and, people will understand what is true and what is not. And the market is going to change a little bit backwards at the beginning of 2023.
Now, we discussed this a little bit, your first startup that you didn't raise capital, and Rapyd now, where you have raised lots of capital. I've interviewed scores of founders over the years, particularly in fintech, and some say you should raise as much money as you can whenever you can, and others that it's better to be more capital efficient from the get-go, to raise, I guess, as little as possible, so that your path to profitability is perhaps faster. What's your take? I guess I have an idea of what it is, but what is your take on this?
The take is very simple. I've done both. I had the bootstrap startup company that I never raised a single cent, and I raised $800 million. So I can give you the real take. Whoever tells you that they shouldn't raise a lot of money, never saw a market that is going down and never saw a distressed market that, you need money. I remember with my own bootstrap startup company going through the 2008 crisis and going generally through crises as a business that you don't know where you're going to bring the money to pay salaries to. It is a much better position to sit on $800 million when the market is going down and having the ability to plan 5 and 7 years down the road when everybody's in panic. The rule in fundraising is only one. You raise money when you can, not when you need. So as if you can raise, take the money and put it in your own bank account. And later, think what you can do with it. But not raising money and being lean is not the smart thing to do.
So is now the best or worst time to be a fintech? Or is it simply a case of, well, if you have got the money in the bank, or if you were lucky enough or clever enough to raise before things turned, then that's a great time for you. And if you didn't, then perhaps not?
So definitely, if you raise the money, if you're lucky, it's only about luck, by the way. It's not about being smart because nobody knows when the market will turn against you. So if you're lucky enough to raise money ahead of time, then definitely it's an amazing time to be a fintech because you have endless opportunities now in front of you while all your competitors are now in distress mode. If you didn't raise enough capital and you're a fintech now, you are in a very big problem because in the next 8 to 12 months, it's going to be super complicated for you to raise additional capital. So it's not going to be the best time to be a fintech. But again, it's not because of the business, it's because of the trend. And the trend will change again. It's only a matter of time.
And I think this is particularly relevant to Rapyd, if I understand correctly, about talking about interoperability. In that, effectively, if I understand correctly, you're kind of removing this problem so that people can make global payments from whatever their payment processor is. But when is this something that's going to become a reality for everyone globally? Is it when they all sign up to Rapyd, or is this something that's eventually going to happen kind of organically anyway?
No, so it's not about signing up to Rapyd. At the end of the day, what Rapyd operates like a type of a Visa or a Mastercard behind the scenes for all these local payment methods. So the consumer doesn't need to sign up to Rapyd. It's the merchant behind the scenes that is selling needs to be in Rapyd or a Rapyd-like platform. The reality is that a lot of countries are basically building their own payment rails. It is a trend that started several years ago and it's becoming bigger and bigger. And this trend is not going to go away. On the contrary, the number of payment methods globally is going to increase significantly. And I think that the interoperability problems will continue and grow. And people will be looking for ways. A lot of companies are now shifting into the Rapyd direction of basically offering all these different things and building these rails to connect because they understand that the future is there. And I think, in a 5 to 7 year time frame, the market will be already in a situation that most of the payment methods have the interoperability and the connectivity for doing cross-border payments. Hopefully, and I really believe in it, that we will be the most dominated force in the space.
And looking at payments, how much time do you think cards have left? Or how much time do you think we have left until cards and perhaps even cash go the way of the dinosaurs?
So cash will not go away that quickly because at the end of the day, with all due respect to the fact that governments are trying to fight cash, still a lot of people are dependent on cash and it's going to be very complicated to take out cash completely, but it will continue to decline slowly. It's not dropping, in a very fast pace down, but it's declining. I think cash will still continue to be around in the next 20 years, but it's going to decline. And of course, new generations do not use cash anymore. Regarding cards is interesting because what happens in reality is that the mobile payments like Apple Pay, Google Pay, Samsung Pay, and etc. are killing the card experience. You're not paying with a card anymore. You're paying with your phone. Your card is still behind the scenes linked, right, to the phone, but it's only a matter of time until the phone will be able to connect directly to your bank account and pull money out of the bank account and send it to the merchant. So if you look at countries like India and Brazil, they're already there. They have UPI and they have PIX, which are basically payment methods that are skipping the card rails. And I believe that in a matter of 10 to 15 years, the card rails are going to be completely not relevant. I think this is the reason why you saw Visa trying to buy Plaid, why Mastercard bought another company that is related. I can't forget the name of the company for a second. It's related to bank account payment initiation in Europe. Everybody understands that the future at the end of the day is push payments directly from your bank account in real time to somebody else's bank account. So combination between the mobile wallets and these real-time payments from bank accounts probably are going to be ones that will kill the card race.
Okay, Arik. So look, it's time now for our round of rapid fire questions. I guess A little play on words there, a little joke there for Rapyd. Are you ready?
Yes.
So I've got 90 seconds on my phone timer. One word answers is what I'm looking for. And when we run out of time, we will stop the clock. So away we go. What fintech segment besides yours has the biggest potential over the next 5 years?
Buy now, pay later.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Compliance.
Are we at the beginning, middle or end of the fintech wave?
In the middle.
Do you have a metaverse strategy?
No.
Have EU and US regulations kept pace with new possibilities and behaviors in the financial services industry?
EU, yes. US, no.
How would you describe NFTs, non-fungible tokens? A scam, B, an interesting concept, or C, part of the future that we really don't want to miss out on?
Scam.
Have you ever invested in crypto?
No.
Are physical points of sales part of the future of finance?
Yes.
On a scale of 1 to 10, with 10 the most likely, how probable are the following, how likely are the following to happen in the next 10 years? One of the neobanks will be as profitable as a top-tier legacy bank.
0.
CBDCs, central bank digital currencies, will become a mainstream reality in the US or EU.
7.
That you'll be able to open a crypto account at a top-tier bank.
10.
SWIFT will still be the main tool used for transferring money around the world.
1.
A new card or non-card based rival will emerge to challenge Visa, Mastercard, et al.
10.
And finally, that we'll see a top-tier bank or insurer bought by a fintech.
0.
Arik, I think you're only the first or second person to get through all of those questions in 90 seconds, because I'm afraid that's the end of the rapid fire round of questions and the end of our conversation. So I really just want to thank you, Rapyd co-founder and CEO Arik Shtilman, for joining me today.
Thank you very much for having me again. It was great talking to you.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.